Good morning, good afternoon, good evening, wherever you are. I'm your host, FD465.tv. And now that the act has actually been passed by the House of Representatives in the US, let's revisit the Genius Act and give you my thoughts on what has happened, give you some key milestones, some time frames, and where things could go from here. But before I jump into this video, guys, where we are looking at the Genius Act, or the Guiding and Establishing National Innovation for US Stablecoins Act, acronymed Genius, please note that what I'm going to share with you in this video is not financial advice. If you do require financial advice, please approach someone who's trained to give you financial advice. The information I'm sharing with you in this video is just for educational as well as entertainment purposes, and it's also not targeting UK audiences. If you were wondering, no, we are not targeting UK audiences. The UK authorities are trying to protect you just in case you end up losing your funds. That said, let's come back to what just happened. So the Genius Act introduces a federal state regulatory regime for stablecoin issuers. It emerged amidst debates about incorporating elements of the Stable Act, a competing legislative proposal. Some key milestones and timelines: the Act's provisions will become enforceable on the earlier of the following. It can become enforceable from 18 months post-enactment, projected to be around November 2026, or 120 days after the issuance of final regulations by the designated federal authorities or regulators. I think it's going to be the latter, because 18 months, I don't think Donald Trump can wait that long. He's excited, so this might end up being done within the first 120 days or 4 months from where we are. So you're talking of around November 2025, which is this year. And some critical dates include rulemaking. So rulemaking should happen within 1 year at federal and state level, where regulators must publish implementation rules. Anti-money laundering innovation, where the Treasury will collect public input on anti-money laundering techniques within 30 days of enactment. Good foreign regime assessment within a year. Rules must be established to assess the compatibility of foreign stablecoin regulatory regimes. And then there is certification review, which includes states seeking to regulate stablecoins must prove alignment with federal standards and pass a federal review. Custodial compliance, which must be done by year 3. Only stablecoins issued by approved entities or PPSIs can be used or custodied. So now you're starting to see some structure in the US instead of going and making regulations by tweets. You know who I'm talking about. As for some definitions and scope, you got payment stablecoin, which is defined as a digital asset intended for payment or settlement, redeemable for a fixed amount of fiat currency. The definition excludes securities, commodities, and deposits, and regulated institutions include those permitted payment stablecoin issuers or PPSIs, including banks, non-banks, and state-regulated entities. And I think that leaves the door open for crypto companies there. Digital asset service providers, these are entities that transact or custody digital assets for compensation, and regulatory authority resets with federal banking agencies, for example, the Fed, OCC, FDIC, but not with the SEC or CFTC or CFPB. State regulators may oversee local permitted payment stablecoin issuers or PPSIs. So what are the requirements for issuers and custodians? Well, issuers must maintain a one-to-one reserve backing and publish monthly reserve disclosures. I think that's good for security. Issuers must also follow capital, liquidity, and risk standards. They must also avoid paying interest on stablecoin. Okay, interesting. But DeFi will be paying. Custodians must segregate customer assets from their own, be under state or federal supervision, not reflect assets as liabilities on their own balance sheet. A bank, that's quite key, because the Biden administration wanted banks to actually log any crypto assets or digital assets as a liability, which is not good for their finances or their balance sheets. Moving on to federal and state oversight, you got both federal and certified state regulators are empowered to supervise and approve and enforce compliance. Application reviews include timelines, appeal options, and clear qualification criteria. Entities under $10 billion in issuance may opt for state supervision, which I think actually facilitates startups. They don't need to have the same supervision as that coming from federal regulators, which sometimes can be more stringent. As for customer protection and AML or anti-money laundering, no impersonation. Stablecoins can't suggest affiliation with the US government. Anti-money laundering compliance. Permitted payment stablecoin issuers are subject to the Bank Secrets Act, with requirements for customer due diligence and reporting. Moving on, insolvency protections. The Act grants priority claim rights to stablecoin holders in insolvency cases for both custodians and issuers. Payment stablecoin reserves are excluded from bankruptcy states, and any unsatisfied claims are still received top priority. When it comes to rulemaking process, federal and state regulators must issue coordinated rules within 1 year of the Act being signed. These may include interoperability standards for blockchain and digital finance. After final rules are enacted, regulators must must report to Congress within 18 days. So they also go on to say stablecoins are not securities or commodities. Non-payment stablecoins and reporting. The Genius Act does not regulate non-payment stablecoins, e.g. those pegged to other crypto assets. So those that are backed by other crypto assets, they are not regulated by the Genius Act. However, it requires a treasury-led study of these assets within a year. Okay, so that leaves room for algorithmic stablecoins to be regulated at some stage. Let's hope that happens. Foreign issuers, well, foreign stablecoin issuers may enter the US market without becoming permitted payment stablecoin issuers if their home regulatory regime is deemed substantially comparable. They must register with the OCC and hold sufficient US-based reserves. So what is the difference between the Genius Act and the Stable Act? Well, the key differences include certification process, whereas the Genius uses three agents committee, Stable Act assumes validity unless Treasury objects. Insolvency provisions, the Genius Act includes stablecoin holders or stablecoin holder protection, whereas the Stablecoin Act does not. Restrictions on issuers, the Genius Act restricts non-financial public companies, the Stable Act does not. When it comes to endogenous stablecoins, Genius orders studies, Stable Act imposes a 2-year moratorium, which is a ban for any algorithmic stablecoin regulations. Okay, so what is the roadmap for institutions? Well, entities aiming to issue or custody stablecoins must apply to the appropriate regulator within 1 year of enactment. They must also implement robust compliance, audits, and reserve programs, and foreign issuers must navigate a separate equivalency and registration process. So all in all, guys, I think this is good news for the crypto markets. It means the dollar is being officially introduced into the crypto markets, DeFi and so forth. While stablecoin issuers cannot charge interest, DeFi protocols are certainly going to be charging interest, and I can see a situation where this act, the Genius Act, as well as what Donald Trump has been suggesting, that is opening up the $9 trillion market of private pension to enter the crypto markets, we could be about to see the bull market like none we've seen in the past. What I want to know from you guys is, what are your thoughts as far as this Genius Act is concerned, now that it's going to be signed into law by Donald Trump since it has passed votes within the houses of Congress? What are your thoughts? Let us know in the comment section, guys. Until the next one, FD for 65.tv signing out for now. Bye.